In India's growing economy, there's a standout industry that's growing rapidly. This growth is capturing the attention of many as the industry takes off to new heights. While it might look like a goldmine for investors with all that growth potential, there's a twist. There are significant challenges that this industry faces. Even Warren Buffett, the investment guru, has famously been critical of this industry. According to him, it's been gobbling up capital like nothing else over the past century, and he believes that the combination of factors such as large fixed costs, robust labor unions, and volatile commodity pricing does not paint a favorable picture for success. Now, the sector we are talking about is the aviation industry. In this episode, let's explore the highs and lows of India's aviation sector. We will first talk about the remarkable growth that the Indian aviation sector is seeing. We will then look at the players. We will also talk about the challenges the airline industry faces and also look at the performance. Let's begin. You're watching Informed Investor, an initiative by Research and Ranking. India's aviation industry is experiencing remarkable growth. India's growing air passenger traffic, new airports, and even crowded airports are making media headlines. Now, India has also claimed its spot as the third largest domestic aviation market globally and is poised to surpass the UK as the third largest air passenger market by 2024. Moreover, international operations are also coming into greater focus. Now, the impact of the aviation industry on the economy is also substantial, with Indian aviation contributing 5% of the GDP and generating a total of 4 million jobs. Additionally, the industry boasts a $72 billion gross value added contribution to the GDP. Now, back in 2012, around 58 million domestic passengers had taken to the skies. By 2022, that figure has more than doubled to 136 million. Now, this shows a CAGR growth of 8.9% during the period, while the international passenger traffic grew at 3.1% during the same period. Going forward, industry experts also expect a continued upward trajectory. Now, this robust demand in India's aviation sector has also sparked a flurry of strategic initiatives. Many industry players are making substantial investments, including acquiring new aircraft, and mind you that no nation in the world is buying as many airplanes as India. Now, Indigo, in a groundbreaking move, recently placed an order for an astounding 500 aircraft from Airbus. Additionally, earlier this year, the newly privatized AirIndia made waves by ordering 470 narrow and wide-body jets from Boeing and Airbus. Now, these significant developments do signal a paradigm shift in India's commercial aviation landscape. Now, let's talk about what exactly is spurring the growth in aviation. Back in 1994, the country took a significant leap by repealing all laws related to the formation of airlines. This move flung open the doors for private airlines such as Jet Airways, laying the groundwork for the current Indian aviation industry. Now, one major driver for the demand side of growth is, of course, the rising working population and income levels. The expansion of the middle class, fueled by economic growth and increasing consumer spending, has played a pivotal role. Affordable options provided by low-cost airlines has also made air travel more accessible to a broader audience. While railways are a close substitute with a lower price tag on average, with a price differential of about 3.2 rupees per kilometer, air travel stands out as the faster mode of transportation. Now, this distinction and affordability has contributed to the growing demand for air travel, further boosting the aviation industry. Interestingly, the Indian air travel market also remains highly underpenetrated, leaving ample room for existing players to expand their operations. The enormous potential waiting to be tapped is evident, and key factors driving this growth includes rising incomes, the presence of low-cost airlines, increasing investments, government initiatives, and a growing GDP. Now, with all of these factors, the Indian aviation sector is undoubtedly soaring towards a promising future. Now, let's dive into the players in the Indian aviation industry. As of October in the fiscal year 2024, Indigo emerged as the front runner, boasting an impressive market share of 62%. Now, what makes this even more noteworthy is that no other airline comes close to reaching a double-digit market share, highlighting Indigo's dominant position in the market. Now, comparing these figures to the market scenario in fiscal year 19, which was 5 years ago, Indigo has shown a steady increase in market share, making an impressive gain of 19%. Additionally, Indigo achieved its highest ever market share of 63.4% in July and has consistently maintained a market share above 60% for the past 6 months, which shows its dominance. Now, following Indigo, AirIndia takes the second spot with a 9.5% market share, while Vistara follows closely at 8.7%. AirAsia India secures the fourth position with a market share of 7.6%. Notably, the Tata Group of airlines, including Vistara, AirAsia, and Air India, holds a consolidated market share of 25.93%. On the other hand, SpiceJet, with a market share of 5%, has experienced a decline over the past couple of years, indicating a contraction in its market presence. Now, one of the noteworthy success stories in gaining market share is also Akasa Air, which commenced operations in mid-2022. In just its first full month of operation in September, Akasa Air secured a 1% share of the domestic market. Now, this newcomer swiftly climbed the ranks, surpassing even SpiceJet in June to claim the 5th position. As of now, Akasa Air commands a market share of 4.6%, defying initial skepticism about its survival in a crowded market. If you notice the two charts depicting the market share for fiscal year 19 and fiscal year 24, there are two major airlines missing in fiscal year 24. They are Go First and Jet Airways. On May 2nd, Go First abruptly announced bankruptcy, suspending all of its flights. This came in as a huge shock as the country's fourth largest airline crashed, shaking the entire aviation sector. Now, the company cited factors such as financial losses caused by a variety of factors, including the COVID-19 pandemic, increasing fuel cost, and engine procurement issues. Now, the airline industry in India has also faced notable setbacks in the past, with prominent cases like Kingfisher Airlines in 2012 owned by Vijay Mallya and the collapse of Jet Airways in 2019, which still after 4 years struggles to resume operations. Now, the rise and fall of airlines in the Indian aviation sector indeed paints a dynamic picture of the industry challenges and opportunities. So now let's dive into the challenges faced by the industry. One of the challenges for the airline industry is the seasonality and volatility of demand. Airlines operate in a cyclical business, experiencing high demand during peak travel season and lower demand during off-peak periods. Now, this can lead to significant fluctuations in revenue and profitability. Now, typically, Quarter 3 and Quarter 1 are seasonally strong quarter, with Quarter 3 being even better than Quarter 1. Meanwhile, Quarter 2 and Quarter 4 are seasonally weak quarters. Now, this trend can also be observed in Indigo's quarterly revenue growth, showing stronger performance in Quarter 1 and Quarter 3 and weaker performance in Quarter 2 and Quarter 4. The airline industry is also particularly vulnerable to external events such as political instabilities, natural disaster, health crisis, which can drastically affect operations and passenger demand. If you remember, the COVID-19 pandemic had a significant impact on the airline industry, with travel restrictions and reduced demand leading to massive losses for airlines. Many airlines have had to lay off workers, cut routes, and even declare bankruptcy due to the pandemic's impact. This has resulted in a dramatic reduction in revenue and profitability for airlines, and many are still recovering from these challenges. Now, another major challenge for the airline industry is the high capital requirement and operating costs. Airlines require significant investments in aircraft, maintenance, and infrastructure, which can put a strain on cash flow and balance sheets. In addition, the airline industry is also subjected to high fixed costs such as labor and fuel. Now, take a look at the overall airline industry cost structure, and it can be seen that the highest cost accounts to aircraft fuel and oil with about 33.7%, followed by depreciation. Now, airlines require something called aviation turbine fuel, which is a derivative of crude oil. Fuel prices are a significant expense for airlines, and fluctuations in oil prices can lead to significant changes in operating costs. The rise in ATF will not only impact the bottom line of domestic airlines, but will also limit airlines' ability to operate extra flights in order to save costs. Also, your airfares usually get more expensive as they tend to pass on these costs to the customers. Now, another factor is also the rupee. With the rupee depreciating against dollar, this further adds to the airline's problem as fuel is usually dollar linked. Now, to understand the cost structure on a more company level, let's take an example of Indigo expenses. We see that the fuel accounts for 38.2% of the total cost, followed by repair and maintenance, depreciation, and employee costs. Foreign exchange losses also accounts for 4% of the total cost. On the back of all of these massive expenses, airlines operate with low margins or even losses. If you see, most airlines have huge losses, and the COVID pandemic has worsened the situation. Now, Indigo was known for being the only profitable airline in India, faced challenges during the pandemic, resulting in operating losses for 3 consecutive years. However, the recent development of Indigo turning around and posting a profit in the current fiscal year is a positive sign. The presence of key players such as Air India, Indigo, Vistara, Akasa Air does create a very diverse market in the Indian aviation industry, enhancing options for travelers. However, the diversity also gives rise to intense competition and price wars within the aviation industry. Since the Tata Group's takeover, Air India has undergone a significant transformation with rebranding and upgrades aimed at staying competitive. The entry of new players and the disruption caused by low-cost airlines like Akasa Air have further contributed more competition. Now, this kind of intense competition often manifests in pricing strategies aimed at capturing market share. The race to the bottom in terms of ticket prices can also lead to low profit margins and increased volatility for airlines. However, the presence of multiple airlines also makes the sector very competitive. The inflow of technology and investment is crucial for the sector, and competition also ensures a level playing field and promotes consumer welfare and choices. The aviation industry in India also operates within a very complex regulatory framework. Airlines must comply with various safety regulations, which usually requires significant investments in training and equipment. Additionally, regulations related to pricing, scheduling, and route allocation adds another layer of complexity, influencing the competitiveness and profitability of airlines. The challenge of attrition, particularly in terms of pilot shortage, is also another critical issue facing the Indian aviation sector. In the case of Akasa Air, the airline, which had a pilot strength of over 450, experienced a significant attrition rate. In July and August alone, about 43 pilots, nearly 10% of its pilot strength, resigned. Now, this shortage of pilots is not just unique to Akasa Air, but is a concern across various airlines in India. While airlines are eagerly placing orders for a substantial number of planes to be delivered over the next decade, the focus on acquiring an adequate number of trained and experienced crew members, especially pilots, has become a pressing concern. While there are indeed promising factors that indicate the potential for the Indian aviation sector to flourish, it is also important to understand the challenges that come with it. The positive stock market performance of airlines like Indigo does reflect successful operations and strategic management. On the other hand, the less favorable performance of stocks like SpiceJet and Jet Airways do indicate underlying structural issues. Going forward, the demographic advantages, rising middle income segment, increasing competition, and infrastructure development are all positive indicators for the sector's growth. Now, these factors present opportunities for airlines to tap into a growing market and expand their operations. However, as an investor, one must be aware of the associated risks. Currency fluctuations can impact operating cost, volatile fuel prices can affect profitability, and changes in rules and policies can introduce uncertainty. So overall, it is essential for us to be aware of these factors. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.